Jim, we've got oil now trading back above these levels that we saw when the Saudis and Russia began the price war. We're now looking at that psychologically key $40 a barrel pricing when it comes to Brent, and a lot of indicators suggesting that we're back to a positive uptrend. So what's kind of driving this return to normality?
Yeah, that's right, Heidi. Definitely a more normal type trading than what we saw, just a month or so ago. As you say, market's pushing towards that $40 a barrel level. I think in the very immediate term, the market is very much focused on OPEC and the meeting that they are expected to have this week, which seems to be moving towards an agreement to extend the production cuts for at least a month, maybe up to 3 months. And I think the market needs that to sustain the rally at current levels. If you remember, a couple of weeks back, we heard reports that the shale producers in the US were already preparing to drill more wells if the market goes above 30. And obviously, we've been above 30 for a while now. So if that production comes back on stream, and there's also signs that Russians are getting maybe a little bit of itchy feet about wanting to ramp production up again. And if they make more signals along that front, there is risk that we could go backwards in terms of the price. So I think there'll be wariness of that as we head into that meeting later in the week.
In the meantime, we have seen these oil storage facilities really come off from those highs, as this GTV chart on the Bloomberg shows. Those floating storage globally is really coming off their highs since mid-May. Will this have an impact on what decision OPEC makes this week on extending those output cuts?
Yeah, well, it's very finely balanced, isn't it? I think, OPEC will certainly be wary of what's going on in the US in terms of the shale producers. We had a couple saying that they're preparing to drill more wells. But obviously, they won't want to be caught out. They won't want those US producers to be taking market share off them. So it's a fine balance they've got to draw. And Russia historically has been the one that's been pushing to get output back up again. It's hugely important for their budget to get those oil revenues coming in. So they won't want these depressed levels of production to continue for too long. The Saudis equally, they've been hit. Their balance, it's been hit big time by the rout we saw in oil prices earlier in the year. So they'll be wanting to get back to more normal levels of production as soon as they possibly can. But on the flip side, they'll be wary of causing even more volatility. We've only just come out of that period of extreme volatility brought on by the COVID lockdown. So there'll be an awareness that any steps to prematurely put production back into the market might cause another pullback in the price. I think we're pretty finely balanced, and what we've seen this week is that the market's traded fairly sideways around the mid-30s level. And I think until we get more clarity from OPEC, that's probably going to be the way of things.